Bitcoin has come down, and the ETFs track the price of Bitcoin going down. And there are a lot of people who came in maybe at 100,000 or 110, they're underwater. You're probably the guy who gets the phone calls. You're probably the guy who has to talk to them if they're like, hey, what's going on here? How is that going? How committed are they? Or are they starting to get shaky now that we've been around 65 for a while?
Well, what we've seen consistently through these 2.5 years is that the ETF investor base tends to be more of a fundamental long-term buy and hold type segment. And that's continued to be exhibited through this downturn. And everybody who comes into Bitcoin hopefully understands that it's a volatile asset. It's always been a volatile asset, right? There have been now 5 major boom and bust cycles. Each time the cycle ends significantly higher than the prior one, but with a bumpy ride along the way. And so it's been the case in this one as well. So I think that we've seen sentiment turn in a noticeable but subtle way the last month or so. You've seen Bitcoin decouple from equities starting earlier in the year. For a while, that was hurting Bitcoin because equities, particularly AI, were roaring, and Bitcoin was kind of flat to down. Then in July, when AI had the huge pullback, Bitcoin outperformed significantly. That decoupling is healthy because it's part of the thesis for a lot of people around Bitcoin as a diversifier and potentially a hedge against some of the left tail risks that exist elsewhere in the portfolio.